Good morning everyone and welcome to the Trade Talk podcast. Today we'll start with global markets and global cues. In the US, CPI and inflation data for the month of February remained moderately strong. However, inflation headlines suggest they are trending downwards, which could raise the bets for an interest rate cut in June 2024. Our inflation numbers are in line with expectations, and as usual, core CPI remained down and food inflation increased. There were hardly any major changes in global macros, but base metals outperformed precious metals. The entire setup of the market is clearly indicating us that the markets are into corrective mode. They are correcting from their highs. Mid-cap and small-cap companies where we saw substantial gains in the year FY 23-24, now they are correcting from their highs ahead of the closure of the financial year. So all these things are taking place, and maybe that's the reason we are seeing weak sentiment in the market. So our strategy should be to look for adding some bets if there is any specific sell-off in the market. At the same time, if there is any rally, then we should look for taking some profit on long positions. But in last 2 days, we are seeing some correction and consistent weakness in the market. Again, the markets are approaching to the important crucial levels of 22,200, where the market is having support in terms of option statistics as well as in terms of retracements. So the strategy should be to look for adding some positions close to 22,200 levels with a stop loss at 22,100. In fact, we should look for adding positions between 22,250 and 200 levels. On the higher side, 22,400, 450 will be the next biggest hurdle. Crossing 22,450 will actually help the market, because in that case we can expect some short covering, and the chances of hitting 22,500, 530 would turn bright. But at the same time, around 22,500 and 22,600 there is huge amount of call writing, so that will also not allow the market to cross these levels so easily. Broadly, we are of the view that the markets are going to trade within the range of 22,600 and 22,200 on the downside. For the Bank Nifty, there also we saw some specific volatility. It was between the range of almost 1,000 points on Tuesday. Again, if there is any correction, then close to 47,000, 46,900, we should look for adding some positions. On the higher side, 47,700, 47,800 will be the next hurdle zone. So there we need to be careful. Broadly, we are of the view that the strategy should be to buy on dips, and IT stocks should be on the watch list in today's date, as most of these stocks are forming some higher bottom or specific bullish reversal formation on daily charts. So TCS is already trading into all-time highs. There we can expect further more activity. For Infosys, the stock is forming some higher bottom, and HCLTech as well as Tech Mahindra, they are reversing from their immediate support levels. So for the day, focus on IT companies and trade accordingly. That's all from my side. With this, we are ending today's morning podcast. Thank you very much for listening to me. Have a great day to all of you.